Welcome back to XRP Financial Horizon. If you've been watching XRP this past month and wondering why nothing seems to be happening, well, something actually is happening, and most people are missing it. The silence in this market is not nothing. It's a setup. 3 weeks of going absolutely nowhere, bouncing between the same walls, and now drifting right back down toward that 1.10 floor again. And the way it's getting there? Slow, grinding, no real pushback from buyers. That's the part that should have your attention today. We're going to walk through everything: the price action, the technicals, the institutional money still moving in the background, and most importantly, the exact levels that will tell you where XRP is actually headed next. Stay with me because this one matters. Let's be real about where we are right now. XRP has been stuck, genuinely stuck, in a range that's been grinding traders down for most of June. And what makes this frustrating isn't just the sideways movement, it's the pattern inside that sideways movement. Every time the price pops a little, it gets sold. Every time buyers try to push higher, the momentum just evaporates. So instead of building pressure near the top of the range where a breakout could develop, XRP keeps leaking back toward the bottom. That's not neutral price action. That's price action that's slowly telling you something. When a market keeps revisiting the same support floor without ever gaining meaningful ground above it, it starts revealing where the real conviction lies. And right now, the conviction is not sitting with the buyers at the top of this range. It's sitting with the sellers who keep showing up every time price gets a little comfortable. Here's what the numbers actually looked like over the last session, and I want you to pay attention to the details here because they matter more than the headline number. XRP dropped from 1.1313 down to 1.1109, about a 1.8% decline. Now, if you saw that number on its own, you might shrug it off. Less than 2%, no big deal. But the way that move played out is what makes it worth discussing. This wasn't a sharp flash crash that reversed quickly. It was a slow, methodical grind lower over the course of the session, with price just steadily pressing down until it was sitting right on top of that 1.10 support zone into the close. Slow, grinding declines are actually more telling than sudden drops in many cases, because sudden drops often get bought aggressively. Slow grinds don't. They reflect a market where buyers simply aren't interested in stepping in front of the selling, and that tells you something about the underlying conviction on both sides right now. But that wasn't even the most important moment in recent price action. The move that really caught my eye happened on June 22nd, when volume suddenly jumped to 65.4 million XRP, roughly 84% above average daily volume. Nearly double the typical trading activity showed up in a single session, and instead of that volume driving a rally, it powered a reversal to the downside. Think about the significance of that for a second. When you get abnormally high volume on a down move, especially near a resistance level, it's telling you that there were serious sellers there, not panicked retail traders, but meaningful supply that was waiting to be distributed. That kind of volume signature near the top of a range is one of the more reliable warning signs in technical analysis. It says the overhead resistance is real, it's heavy, and it absorbed whatever buying interest existed at those levels without breaking a sweat. Now, the technical picture beyond just the price levels is also worth talking about because there's been a quiet but significant development that changed the nature of the chart over the past few weeks. XRP lost support from the weekly Ichimoku cloud. For those who aren't deep into technical analysis, here's what that means in plain terms. The Ichimoku cloud is essentially a zone that defines whether a market is in a bullish or bearish structural position. Being above the cloud is bullish. Being below it shifts the bias. XRP slipping below that cloud on the weekly time frame is not a small thing. It means the longer-term chart structure has deteriorated, and the traders and institutions that use this tool as part of their framework will now require significantly more evidence before they start buying aggressively. It raises the bar for bulls and gives bears an additional technical argument on their side. It's one more weight added to an already heavy chart. Then there's the bigger overhead problem that hasn't gone away. The downtrend from XRP's 2025 peak. This line has been pressing down on price for over a year now, and analysts have consistently pointed to the 1.28 to 1.30 area as the zone XRP needs to clear convincingly to actually change the broader structure. Right now, we're sitting in the low 1.10s. That means XRP needs to rally 15 to 18% just to reach a level where the conversation about a real trend change can even begin. That's not impossible. XRP has made bigger moves in shorter time, but it's important to understand the scale of what needs to happen. It's not a matter of a small bounce. To flip the structure, XRP needs a sustained, volume-backed push that breaks through multiple layers of resistance and holds above them. That hasn't happened yet, and until it does, the downtrend from those 2025 highs remains the dominant force on the chart. Something that doesn't always get the attention it deserves in these conversations is what's happening underneath the surface in terms of network fundamentals. And the honest answer is that things have softened. On-chain activity, the number of transactions, the level of network engagement has cooled off in recent weeks. That matters because organic network usage is one of the genuine demand drivers for XRP beyond just speculation. When people and institutions are actively using the XRP ledger for cross-border payments and transactions, that creates real demand. When that activity slows down, one of the underlying supports for price gets a little thinner. On top of that, futures market data has been drifting in the wrong direction too, open interest declining, positioning pulling back. When traders reduce their futures exposure like this, it generally reflects uncertainty. People are closing positions and moving to the sidelines rather than placing new bets, and that kind of market environment tends to produce exactly the type of low-energy, range-bound drift we're currently seeing in XRP. Here's where I want to give credit where it's due, though, because not everything in this picture is pointing in the same direction. Despite all the softness in price and the cautious technical backdrop, XRP ETFs pulled in $2.4 million in fresh inflows on June 20th. And this wasn't a one-day thing. It's been part of an ongoing trend of institutional buying that has continued even as retail traders have grown more hesitant. That separation between institutional and retail sentiment is genuinely interesting. Retail money tends to chase momentum. It comes in when things are going up and disappears when things slow down. Institutional money operates differently. It builds positions during periods of weakness and consolidation, when prices are less exciting but potentially more attractive for longer-term entries. The fact that ETF inflows have stayed consistent during this frustrating sideways stretch tells you that there are larger players who still believe this asset has meaningful upside from current levels. That's not nothing. It's a real piece of the puzzle. Let's bring it back to the most important area on the chart right now, which is the 1.05 to 1.10 support zone. This is the level that has defined the lower boundary of XRP's range throughout this entire consolidation, and it's been tested multiple times. And here's the honest thing about support levels. Every single test makes them a little bit weaker. The first time buyers defend a level, they do it with confidence. By the third and fourth time, some of those buyers have already sold and moved on. The pool of demand sitting at that level gets smaller with each test, and the sellers who've watched those bounces fail to go anywhere become more emboldened to push through. Right now, the 1.05 to 1.10 zone is well tested, and the bounces from it have been unconvincing. That doesn't guarantee a break lower, but it does mean that bulls defending this area need to do something different this time. They need to actually follow through with buying volume and push price meaningfully higher, not just stabilize it temporarily. The reason so many XRP traders are watching the 1.10 level with such intensity right now is because of what a break below it would actually mean. This isn't just about a 10-cent move lower. A clean break below $1.05 would open the door to a test of $1.00. And $1.00 on XRP is not just a technical level, it's a psychological one that carries enormous weight. Round numbers in financial markets attract attention in ways that other numbers simply don't. A move below parity would generate headlines. It would shake confidence among holders who have been patient through this consolidation, and it would almost certainly trigger stop losses and force additional selling that could accelerate the decline. This is the scenario that bears are positioning for, and that bulls need to prevent. Whether the 1.00 level is actually important in a fundamental sense is almost beside the point. In markets, perception drives reality, and the perception of XRP trading below $1 would be genuinely damaging to near-term sentiment. Now for the bulls, because they do have a path forward here, it just requires more than a modest bounce. Stabilizing near $1.10 is not enough at this point. The market needs to see XRP reclaim $1.18 with conviction to even start changing the short-term tone. Getting back above 1.18 would signal that the selling pressure from the recent decline has been genuinely absorbed, that buyers are willing to push rather than just hold, and that the range might actually be shifting upward rather than just sitting flat. From $1.18, the next targets become $1.20, and then that $1.28 to $1.30 zone, We're the real 0.30 zone, where the real structural test lives. None of this happens quickly or in a straight line, but the sequence matters. You don't skip from 1.10 to 1.30, you have to clear 1.18 first and then build on it. That's the roadmap for bulls right now, and it starts with turning resistance back into support, one level at a time. What's actually interesting about this current setup, and I mean genuinely interesting, not just as a talking point, is how tightly compressed everything has become. 3 weeks in a narrow range, volume drying up on bounces, sellers consistently showing up near the top, and price gradually leaking toward the bottom. In technical terms, this is a coil. Coiling markets store energy, and they tend to release it with more force than you expect when the break finally comes. The problem is that coils don't come with labels telling you which direction they'll break. You have to read the evidence and lean toward a probability. And right now, the evidence, the Ichimoku cloud loss, the year-long downtrend overhead, the weakening bounces, the volume spike on the June 22nd reversal, leans slightly toward bearish resolution in the short term. That doesn't mean it's guaranteed. Markets constantly surprise. But smart money doesn't act on hope. It acts on probabilities and confirms before committing. Let's talk about what actually distinguishes the smart approach to this market from the reactive one, because there's a real difference between watching these levels and knowing what to do with them. A reactive trader sees XRP near $1.10 and immediately thinks it's a buying opportunity because support has held before. A smart trader waits. They want to see what the price does when it touches that zone this time. Does it bounce with volume? Does it reclaim $1.12 or $1.14 within a session or two? Or does it stall, grind sideways at support, and then slip through? That distinction tells you everything. Entering at support because support worked before is not a strategy, it's a hope. Entering at support after seeing genuine buying conviction return, confirmed by volume and follow-through, is a trade with actual logic behind it. Right now, the market hasn't given that confirmation signal. Until it does, the most disciplined thing you can do is watch and wait with your levels clearly defined. For anyone trying to take a broader view of XRP beyond the next few weeks, there are reasons to stay engaged with this asset even when the short-term chart is frustrating. The regulatory environment around XRP has shifted significantly compared to a couple of years ago. The legal clarity that came from the Ripple case changed the conversation about XRP's legitimacy in the United States market, and that's directly connected to why you're seeing sustained institutional interest through ETF inflows even during a difficult consolidation period. The underlying technology, fast settlement, low transaction costs, real utility for cross-border payments hasn't changed. What we're navigating right now is a market structure and sentiment issue, not a fundamental one. Those are two very different kinds of problems. Fundamental problems threaten the long-term thesis. Market structure problems create difficult short-term environments that eventually resolve. Understanding that difference is what separates holders who shake out at the worst possible time from those who come out on the other side with their position intact. To bring everything together for you, XRP is at a genuine decision point right now, and the outcome over the next week or two will tell us a lot about where this market is heading through the rest of the summer. The 1.05 to 1.10 support zone is the line that matters most. Bulls need to not only hold it, but follow through with real buying volume and push back above $1.18 to change the tone. If they fail to do that, and price cracks below $1.05, the $1.00 level becomes the next conversation. The institutional inflows are a real positive. The long-term thesis for XRP remains intact, but the short-term chart is sending cautious signals that deserve respect. Watch those levels, wait for confirmation, and don't let impatience push you into a trade before the market gives you a reason. That's what separates the traders who profit from these setups from the ones who get caught on the wrong side. Stay sharp, keep those key numbers in mind, and we'll see you right back here on XRP Financial Horizon for the next update.